Hello, everyone. This is Nikki, and today we're going to open the market an hour before. Joke. So, this is Awesome 10X Live with Nikki, Jeff, and Doc T. We're in different parts of the world. We have Jeff in Las Vegas, me from Manila, and Doc T's now in Taiwan. Um, what are the topics that we'll discuss? Number one, maybe say anything you wish about the markets and we have an hour to discuss before today's market open. Do you think we'll survive this week after what just happened last Friday? You, Jeff, or T, whoever wants to start.
Yeah, I
Maybe
think
Jeff.
that we have some pretty big events this week. The Fed speakers will be all talking, and then FOMC minutes will come out. So it will either confirm it's called double barrel tightening, where the Fed will reduce their asset buying program. So they'll reduce how many mortgage-backed securities, all that stuff they're buying. So their assets are, I think, around 9 trillion or something. And they also increase interest rates. So it's called double barrel tightening. You guys can Google search that and see what that means. It's definitely a very more hawkish tone. Or will they see from the minutes a pivot from the Federal Reserve? And that will kind of dictate what happens to the market. So we learned from 2020 to 2021 and now 2022 that the Fed and Stanley Druckenmiller even said this himself is liquidity is what really determines valuations. So if liquidity is being
Mhm.
tightened, then valuation compression is going to happen. There's also recession fears. So I've looked at a few indexes. One that's really popular on Twitter is the stripper club index. so, and right now a lot
Well,
of
it's already in
strippers
recession.
in the US are basically saying that we're pretty much in a recession just based on how much their clients are spending. So that is the ultimate form of discretionary income, right? A lot of finance people and stuff like that love to splurge on that type of entertainment.
Make sure
And we're
you're
also seeing it in gaming too,
make
weakness
sure
in gaming as well.
if you search for that, okay?
Uh,
Yeah, so
I
Tencent
did
also
see that.
reported.
Actually, I saw that too.
Yeah, so Tencent
Go
also
ahead.
reported that they had a decline in gaming. A lot of it, some of it has to do with the impact of the China lockdowns and stuff like that, but their gaming division is not growing as fast as it did. Corsair reported, recently, they're down on comps, Logitech as well. See Garena was down 26%, I think, in user and paying users decline. So it's definitely a worrying trend. So when you see entertainment and discretionary income start being impacted, Target and Walmart also reported grocery sales are fine. However, they're more discretionary. They kind of over ordered an inventory, and a lot of like home goods and all that. That's also down. So it's interesting to see that I think that we are in a recession right now. It's just people aren't, it's not officially confirmed yet via the other macro data points, but I think that we're going to start to see, a lot more recession fears later this year that could continue to put pressure on, valuations in the market.
Thanks, Jeff. How about you, T? Say anything about the market this week? Is there anything you wish to comment upon?
Yeah, I mean it looks technically like we could get some bounces, but um, I think it's impossible to say like you're going to go long on things and hold them through even like a 5 to 10% bump, Um, but I think there's still more downside, and I think that all these companies like Costco and Nordstrom, AutoZone that are going to be reporting this week. It's really hard to see them saying things that are contrary to things that we've been hearing. And you have all these a lot of the layoffs are really starting to ramp up, and even companies that uh, that are doing well are just pausing their hiring. So we're really starting to flip, I think, into like this next phase of a liquidity crisis, and it really all seems to be kind of going in that direction of having like a 1 to 2 year period where you're going to see interest rates going up, and the Fed's going to have to like keep reacting to it until until it's just gotten so bad that then they can take their foot off the gas pedal, or off the brakes, I should say.
What could you guys say about just China cutting interest rates today? Is that enough? Or do you think that it's just a cover up for something bigger and something nastier? Any word on China?
Yeah, I
Any
mean,
comments on it, or just
it,
forget about them?
I don't think this whole real estate uh, issue has really been resolved, and then you kind of throw on top of it, I think the 10-cent billionaire came out and said, or the 10-cent uh, CEO came out and came out with strong words, kind of similar to to Jack Ma, like a year and a half ago. So you really have to wonder, if he's coming out and with harsh words, what's really going on, what's brewing there. So it's hard to say, they you have everybody else in the world essentially is really, just in the short period that I've been here, they've been loosening slowly, and it's hard to imagine that they're going to be able to continue doing this without causing some problems with the economy.
Yeah, also Beijing had reported, I think 99 cases of COVID. So if Beijing locks down as well, that could be a very big headwind to.
Hmm.
So I think that with all the fear of China, another thing that's coming up is the Taiwan comment that Biden made. He said that if China were to
Yeah,
take Taiwan by force, that the U.S. would get involved, which
yeah,
is something that we would never ever say. Our whole U.S. political strategy with Taiwan and China is to acknowledge the one China, but also have
mhm,
strategic ambiguity, which is basically don't tell China that what we would actually do.
yeah.
So Biden saying that kind of they try to backstep some of it, but Biden just kind of speaking from off the cuff. So that's a
Shooting.
little concerning. So we'll see what the impact is on diplomatic relations. But anything. So you notice that when that news hit, our pre market kind of dropped a little bit, and it came right back up.
Hmm.
So right now we have a short covering rally that will happen this week, and I think that the next direction will be determined by FOMC. So anything else is noise. If you look at the options flow, a lot of the strikes that expired last Friday were 390 and below. So what the
Mm-hmm.
market did is they closed it literally right at 390. So anyone that had 390 puts or higher made money, and then everyone else, which is the majority, lost money.
Worth
So
it.
it's very interesting to see that it was basically a volatility and gamma kind of unwind, and they wanted to pin it at 390 to basically give max pain for both sides. So I think this week we'll probably see for short term some type of bounce, and I think VIX. If you look at the chart in VIX, it looks ready to make a move to 40. Honestly, it's elevated. It's been staying at 30 for a while, which is not something we're used to. Normally, back in 2020, 21, anytime VIX shot up, it would just get crushed. I would see a lot of put flow on the VIX, like massive put flows. But now I'm not seeing the same activity. So that means the market is not expecting VIX to get crushed again. So it's pretty interesting to see, how things have changed, given that the Fed is now, in a, tightening liquidity and financial conditions. And another thing about to watch too is crypto. I think that this is a significant risk for the market. Looking closely at Tether, they had 3 billion when Luna crashed. They had 3 billion in redemptions. Then they hit 7 billion redemptions, and just today it's 10 billion in redemptions. So we don't know what commercial paper, government bonds, or type of assets that's backing their entire stablecoin. But if Tether were to collapse, that's $80 billion that would get unwinded, and we don't know what DeFi, which is decentralized finance, is very unregulated. It reminds me of the subprime mortgages and everything there. A lot
Yeah.
of capital flows into it, and there's derivatives in DeFi. One of the biggest products in DeFi is derivatives. So if the derivative is tied to certain assets, like the traditional financial markets, like corporate commercial bonds and paper and all that, then it could have a kind of contagion effect. So that would be very critical to watch, is what happens to Tether, which is the third largest cryptocurrency by market cap, by the way. So if this falls, it would be very nasty for all of cryptocurrencies.
What about what if you
Yeah.
have diamond hands though? Do you think if you have diamond hands that you'll be able to just hold on to it? It won't, even if it's exploding in your hand.
Yeah, I think what people in cryptocurrency what people in cryptocurrency forget is that Bitcoin was founded in 2009, and if you remember, we just came off the Great
Mm,
Recession back in
yeah.
2008, and that's when the Fed started increasing its balance sheet
Yeah.
significantly, right? We went from
Yeah.
like 1 or 2 trillion to 9 trillion, and crypto basically was it was a liquidity lottery,
There's
right?
there's
We
been
printed
no
so much
there's been
money.
no recessionary test whatsoever for crypto. No
Exactly. There
recessionary
there has
test.
not. So I
Yeah.
think that Bitcoin is going to go under. I think it's going to go a lot lower.
Yeah.
I know there's a lot of long-term holders, but we had a lot of long-term holders for Shopify, for Seed.
Hmm.
It doesn't fucking matter if liquidity is being removed, interest rates are rising, there's big recession fears. And honestly, I think cryptocurrencies just benefited a lot from the liquidity lottery, right?
Yeah.
It's literally a liquidity lottery. There's so much money being printed, trying to find yields, trying to find return because the interest rates are close to zero. So what happens it's called a ZIRP, a zero interest rate policy environment, is money tries to find returns anywhere. It tries to find a yield anywhere, and it creates asset bubbles. So crypto, I think, is one of that examples where it's a pretty big asset bubble. And you think about it, a lot of crypto, 95% of crypto, what does it really improve in the world?
Hmm.
What does it produce
Yeah.
of value that helps the
I've
world?
had this.
You
I've been
know,
having this
so
arguments like for the past 2 months with like these crypto OGs that they've only known up only. Yeah,
yeah.
there's bear markets and the halving cycle hits, and then then it's up only from there. But and so I try to have like a rational argument that look, you haven't been through an actual like the interest rates just continue to climb event, and the Fed hitting the tightening really hard. No amount of halving cycles or um, minor fees are gonna make the price go up. You like you can't add in trillions of dollars in liquidity from a Fed that basically controls the market. And they just don't want to hear it. It's like you don't understand crypto, and no, you don't understand macroeconomics.
Yeah,
So
exactly. And one thing I want to add on that too is the halving cycle is also very interesting because like Marathon, for example, if you read their earnings, Marathon Mining, right? They're doing really well, honestly. They have done really well. But they said that I think their break-even price is, if Bitcoin is at 6,400 or something. They mentioned in the earnings. So if Bitcoin falls to below 10,000 and it starts getting closer to 6,000, that's gonna be a pretty big risk off signal. A lot of people will have to dump their Bitcoin because they'll be margin called because Bitcoin is a little leveraged. So there's a lot of leverage in crypto too. I mean, in Binance and all these crypto trading exchanges, right? You can leverage 100x.
mhm.
Someone shorted Luna at 50x margin, and
Wow.
his return was like 180,000%. Like he literally made
Wow.
like $30 million
Whoa.
shorting Luna. It was
Whoa.
fucking nuts. So you can see there's just so much leverage, right? And that all that leverage is
Yeah.
going to unwind and people get
Thousand
margin called.
percent.
Yeah, 180,000. I've never seen that in my life. Like that's just insane, like type of leverage that he was betting basically for a short. So I'm trying to set up a Binance account too and try to see if I can short some of these crypto coins. But it's pretty crazy the leverage in crypto. So that's the concern, is if it continues to decline and liquidity is being removed and people are selling crypto, are the long-term holders in Bitcoin going to truly hold the Bitcoin? The margin call for MicroStrategy is 22,000, I think. If Bitcoin hits 22,000, they get margin called, and they
Yeah.
have to then start. And they own one out of 170 Bitcoins. So they're a pretty large whale. So if they
Crazy.
unravel and they sell Bitcoin, then yeah, 20,000 is going to drop to 10,000 very quickly because everyone's going to want to get out. And I think almost half of Bitcoin holders are underwater now. So that's also a bear market statistic. So when you start seeing pain like this, like the stock market, we start seeing people like negative in their portfolio, negative in their stocks. They start making emotional decisions, right? You then say like, I can't take any more of this pain, and people will, then we get a crash. That's how crashes happen. Crashes don't happen when we like peak up, right? Crashes happen when there's just a constant decline in positions and liquidity, and people are like, fuck it, I'm not going to deal with this anymore, and they just nuke their portfolios. So it's very interesting to see what will happen. But for me, it's to stay in a lot of cash and then look for opportunities once they come. But like you said, that I think the next 1 to 2 years will be very tough. So how I'm looking at it in that time frame, right, is when we bottom in equity prices and we're halfway through the recession is when housing prices crash and they bottom out. So that is the best indicator of like the bottom, like the true bottom, I think, of a lot of recessions and so on. Because
say
housing
that again,
prices,
Jeff. Say that again, Jeff.
When housing prices crash and they bottom is when we are halfway through a recession, and that is when the market, that's when like economic indicators start switching to positive and start basically stop getting worse. And the market looks forward, by the way. So when we're halfway through a recession, that's when the stock market starts to recover. So the stock market always recovers before the recession is truly over. Just like right now, we're not in a recession officially, but the market is already pricing it in. The market looks forward, right? So they're already pricing in a recession and recession fear, so to speak. So my indicator to really go long is when housing prices collapse and they bottom, right? That is that's the biggest wealth generation for Americans and anywhere in the world is real estate. Is housing is the largest purchase that anyone makes. So when that finally bottoms, that's when we really hit the hardest part of the recession. And that's when a lot of things unravel too, if you think about it, because a lot of things are tied to mortgage-backed securities, right? They package mortgage together and all that. A lot of leverage is in housing and real estate. A lot of shit is caught up in housing, right?
You have like
it's where
people
most of the wealth
are
is.
trying to sell their place to deleverage and
So
get cash.
when that bottoms, that's when I think equity prices will truly bottom, and that's when I'll be a buyer. And I researched this for a lot of past recessions. And the last thing I want to say is when it comes to like an upcoming recession, just don't underestimate how bad things can get, right? You know, we always look at short term, we look at price action. Bear market rallies always trick you, and they have violent rallies to the upside. We haven't had such high inflation in the past 40 years, okay? 40 years, we haven't had this type of inflation ever. And it's a global issue, right? There's inflation everywhere. China is now exporting inflation instead of exporting deflation. So a lot of supply chains will never go back to normal. So a lot more has to unwind, honestly. That you have to think more of the macro picture of like decades. And we've never faced this type of inflation in the Eurozone, in the US, and all over the world. Food inflation, raw materials, all this stuff, like that's going to take a while to unwind. That's not going to just fix itself in like a quarter or even this year. So you have to think about how the market's going to price all these headwinds in, how it's going to eat at margins and cash flow. Like Target just basically cut its profit outlook in half. Target lost half its profits. Like that's just insane to me. Like how much profit, like, so profit's going to be really impacted, and that's going to change everyone's valuations. Like the S&P yield is going to drop, and then the valuations will compress even further because profit is dropping across the board. And we're starting to see a lot more companies, you know, revising their guidance down, and their earnings are not meeting expectations. So you have to be very cautious in the environment. I'm looking at NVIDIA specifically this week, because if you guys look at what's happening with graphics card prices, they are selling under retail. So that's never happened before, right? Because of the demand of in gaming, crypto, and all that. And for NVIDIA, these key cards to start selling under, you know, manufacturer's suggested retail price shows you that they're trying to offload it, or the demand is no longer there. So
when you know, I guess I kind of look at this period in time, as like a couple different approaches that you can take. Um, you know, I you can kind of foresee this recessionary event coming, and sort of bet on that and look at companies like liquidative services, or look at shorting, um, or looking at like TBT, like an inverse of bonds, or just trading like the volatility, right? You can presume that certain things like commodities, uh, fuels are going to keep going up during this, or like sort of high cash flow dividend returning things. You can kind of bet on those, or you can sort of sit on the sidelines in cash. Like it sounds like that's what you're doing. You're sitting on the cash and sidelines, you know, waiting, and then maybe trading. Like if we get like big pumps and stuff, you're like, no, this is you got to short this. So eventually, I guess if you're kind of like just buying every, you know, you're bullish on certain things like commodities, energy, or recessionary things, but in the end, you don't know when the shoe's going to drop, and that's, you know, nothing is going to get spared. You know, it doesn't matter what you own; it's going to get hit. Um, so I guess it's kind of like, do you need to make trades to in order to survive, or you just, you know, are you going to make a bullish bet because you can kind of see what's coming, or do you just sit on the sidelines with cash and wait for the bottom to come in?
I've read a few articles that actually said that usually when the waves are so hard, like you can see how it's just getting chopped up nowadays. The volatile
Mhm.
is too expensive. Put options are also expensive. A lot of people are bearish. It is oversold, but it can get even lower. Um, I think Stanley Druckenmiller, one of George Soros' proteges and one of the best traders, is really just sticking in the sidelines now, which is
Yeah,
rare because although he believes that there is a bubble, you'd see that the pros aren't really doing much. I mean, some traders might be just neutral, they might have hedges in place, but I'm not quite sure how many of them are actually shorting this market aggressively, even if they're bearish. So, I think most of them are afraid of getting whipsaws like huge rallies.
yeah,
I saw a lot of articles saying that they're just out of the game. I think out in the sense that they're just holding a lot of cash.
yeah. It's so hard because these
It's the
guys, you know,
prudent way because
these
these
guys,
guys
I
have
want to
seen
believe, I want to
there.
believe what they say, but you know, like usually if they're telling you something, like they've already made a move, and like they're, you know, they're maybe they're trying to either buy your bags to get you to sell, or, you know, you just never know with these guys when they say things.
Yeah, well, traders could actually shift their positions every week or every day, but it's not as if like they're Buffett who has to do a 3Q or
Oh yeah,
every
yeah,
year filing.
yeah,
But actually, I've seen how Buffett is really daring for a 90
yeah,
plus year old guy. He's
yeah,
been building a lot of huge positions on oil and energy sector when others wouldn't.
yeah.
I mean, if everyone believes that this inflation is gonna persist for more than 3 years or 10 years, um, I've seen how
I think
this fund
he's been watching our awesome 10x videos.
I doubt it.
Now
I
he's getting
doubt it.
into oil.
No, no, no. So I've seen this article saying that commodities decouple from the Nasdaq, and I'd have to agree with that. There's this very good fund manager right now, 9 Point Capital Partners. He's up 400% last year, 2020 to 2021, when oil was shooting up from negative to positive, and then nowadays, obviously, he's like more than. I'm not sure if he's up another 200% this year. The fund manager's name is Eric Nuttall, Nuttall, not all. So Eric Nuttall, he's from 9 Point Capital Partners. Um, he has been saying that for the last decade, like 2012 to 2022. And a lot of people are also retweeting Lynn Alden's charts, wherein from 1970 to 2020, let me just share that. Wait up. From 1970 to 2020, you've had 5 years, sorry, 5 decades where millions of barrels only grew 20%. I mean, it's even less than population. Wait up, where was that? Lynn Alden, this one. So she shared this. She tweeted this. This got shared a lot. So you can see that from 1970 we were close to 10 million barrels per day, and
Hmm.
this quote unquote
Oh, I
shale
saw
boom
that.
that
Yeah,
people
that
are
was
saying
great.
that could address the oil. Yeah, that was a great. This was a great chart because it just tells you how underinvested the world is. No matter if there's a recession or even a depression, due to the lack of 5 decades of oil production, you you really cannot avoid. I mean, he's saying it's inevitable that we'll get $180 oil. So the
Yeah,
biggest opportunity today is still to go long NRGU. And I've been looking at it.
yeah,
NRGU has 30x from $20 to 550. And yet, if he's predicting that all the inevitable path is like 150 or 200 for the
yeah.
next, whether it happens 5 years, 3 years, and you can see all the food crisis being discussed right now worldwide. I think you got 30% inflation rate in Germany. 30%. You can just see how Europe is hitting
Yeah.
recession even worse than US.
If we're
Um,
if we're truly moving into like a renewable energy uh, decade, and this is kind of like the
no,
last decade that you're going to be using, that you're going to see combustible fuel really be prominent. There has to be some kind of blow off top with it,
no.
and I think
What
we're
they
kind of like in
find.
the phases of it.
So a lot of people in the energy community are saying that it's good and it's noble that we want to have a green energy, but we couldn't replace all of our 1.35 billion ICE engines overnight.
Yeah.
So you could see EVs grow because of just the replacement, say telephone to mobile phones, but it would be impossible to not forecast 15 years or at least 20 more years of huge cash flows in ExxonMobil,
Hmm.
Chevron. And so what Buffett did wasn't a momentum trade. It's like there's probably another 20 years worth of 5 to 10% dividends.
Hmm.
The
Hmm.
sad part here is that while ExxonMobil and Chevron have tons of cash flows and profits, they're doing dividend buybacks, which shouldn't be the case. They should be reinvesting those profits towards more oil rigs, more production, and yet they're just giving those cash away. So there's a structural problem when these energy investments are giving cash when we have a real problem in supply inventory.
Yeah. The
So
kick,
if you
kick.
really want to
Yeah.
destroy demand, it's like double the oil prices today.
Oh, it's gonna happen. I mean, people forgot that in halfway or towards the beginning of the recession of 2008, back in May, I'm looking at the chart right now. Yeah, June 2008 was when oil prices peaked, and it was at $184.94 a barrel. We're right now at $104,
Again,
$105 a
Hmm.
barrel. So we have more to go. So Buffett made like the greatest trade buying the oil companies, honestly.
he
So
did
they
good
will peak, and when they
option.
peak, when they get close to that $180 barrel price, I'm going to short oil because when a recession hits, demand for oil just completely plummets. And I remember oil crashed. I mean, oil like crashed right back down
Hmm.
to $60. So it's going to be a great short trade once we hit that crazy $180 barrel like range.
So the biggest melt up is still in oil.
Yeah.
There's gonna be a huge this
Make
everything but commodities bubble. Everything is a bubble except commodities because fundamentally we have no choice but to keep on pushing oil higher and higher
made
until
the argument at the beginning. I don't know if it was last year at some point that like your gush and like UCO, which are like your kind of double and triple levered oil. That's your new like TQQQ
yes,
from like
agree.
2020. Those are like
That's like the new arc. That's what I also mean. Because like when arc went from 30 to 160, that's like 5x. The new arcs are like all these oil leveraged funds.
yeah.
NRGU 20 to 550, it could go 1,000. I'm not, because if you don't see Exxon Mobil or Chevron going down, how could you actually see these oil related counters go down? Plus, a lot of the small caps you mentioned about Transocean, like Rig, Bor,
Hmm.
BORR, all of these small cap or micro cap oil and energy names that had billions in debt, they're now getting capital financing structure and they are
Yes.
80% down from their 10-year highs. So
Yeah.
I'm reading a lot of these oil energy experts. They're saying that this is the most bullish time for oil and commodities. And yet, even after they've gone 4x from 2020 lows, they are still undervalued
Yeah.
over a 10-year stretch. And you compare the S&P 500 from 2012 to 2022, you'll see that XLE fund is negative 11% versus S&P, which is up 125%. Let me share to you that chart.
Yeah.
Wait. And I think
Looks
that
like
gives.
XLE just broke out too, huh? I'm looking at it right
So
now.
XOE would have to break out further and further because there is no because there's nowhere money where no money has to go somewhere, right? This one, look at this. Um so
You're at
from
81
2014 to
now.
2022, if you are
Hmm.
seeing S&P 500 fall 30% further, where's that 30% going to go, right? It's going to go only in XLE.
Yeah.
This one, PSC, is like super small cap oil and energy names. They're down 80%. So this is where all these ARK investors are going to go. PSC and XLE
Yeah.
could be where this came from Bison interests.
You
And they've been
got
sharing some inflationary
$99.
costs.
XLE $99 back in 2014 was the high, and right now you're sitting at 80.
It has to like go another 50 or 100% from here
Yeah.
if you have worse supply inventory conditions, right? And
Yeah.
remember, that was like 2012. And that was like 10 years ago prices. So if you break $100 for XLE, let me share that. Oh, wait.
Also, Russia, right? You think about the impact of Russia
Hmm.
on the oil prices.
True.
I don't think that's going to go
True.
anywhere. That
Russia
supply
Ukraine is
constraint,
also a problem.
Yeah, I agree.
yeah, that supply constraint is not going to go anywhere. So we hit 180 something, $85 a barrel back in 2008. So this will go to like 200 with Russia's
Yeah.
issues with the supply constraint there. So
Yeah.
yeah, it'd be
It's it's
interesting.
it's
And
it's crazy. Like it's like you can't really draw up a more fundamental dream scenario. You have basically all the production has been shut off, and now you're like shutting off even like the supply from one of the biggest producers in the world. Like it's just, I don't know. I mean, it's a bad situation, but you're going to pay more at the pump, so you might as well make money. Um, with these prices going up.
So, like, I think the biggest problem was big oil or the dirty fuel was vilified, right, for more than 10, 15 years. And even the Wall Street banks that are lending towards coal, oil, and gas are being
Hmm.
vilified today. They're saying that how could we go towards climate change if banks or Wall Street is funding all of these Exxon Mobil? A lot of people are even saying that why is Exxon Mobil in the top ESG funds
Hmm.
and then kicking out Tesla?
And they're kicking out
I mean,
Tesla.
probably we've seen that tweet. So I think like for most people, they
They're
think it's a
coming after Elon politically. You can already
true.
see it like ramping
Yeah,
up
yeah. Elon was like involved in some
with
sexual
the Twitter.
harassment case. Why now?
Yeah,
You
I
wonder
think.
why did it have to come out now?
Yeah.
So I think there is a lot of drama, but at the same time, that vilification of ExxonMobil or how they portrayed big oil as really bad fuel played a role in this shortage. So we have to like think about it since 1970 to 2020, nobody really invested in this oil boom.
Yeah.
And yet you can see population growth. I mean, I was just thinking out loud, like thinking from a common sense. The Philippines, when I was alive, We like maybe just 36 years ago, we were like maybe 70 million people. We're like double that now.
Hmm.
We're like 110, 120 million. So
It
the
just
Wow.
shows.
population, food, you've got food crisis. You're gonna get famine within, I don't know, within a year or two. Because how would you split towards 7 billion people? And I heard like there's at least 40 million tons of wheat from Ukraine that's now nowhere because of the war. So this war is going to cost millions of lives due to hunger, famine, inflation effects. Who knows? It's so bad that people are saying this is even worse than GFC. And in GFC, we fell 60% from the highs. So that means like 8,000 or 7,000 the NASDAQ. It's still going to be worse.
Yeah, I think I think best case scenario, like it's like the global financial crisis. That's best case scenario, which is kind of worrisome when you think about it, because you didn't even have the crypto bros back then either. So that's a whole other deleveraging game. I mean, you have I don't know. I don't have a good feeling about any of it, but we'll see what happens.
I'm not quite sure about crypto being a big thing because I don't think Wall Street truly put a lot of money into crypto, unlike the housing bubble in the past, like
Mm-hmm.
2000. But what I'm afraid of is really how inflation is gonna kick worldwide because Europe's already in a recession. China has to spend all the way and devalue their currency like they're doing now. And you think to yourself, well, during the 1970s when they had this huge inflation and the same I think it was also Gulf War, was it? Oh, sorry. I don't know what happened in 1970s, but they also had this oil hyperinflation.
Yeah.
It was like 8 years, 1972 to 1980. So
Mm-hmm.
could you imagine 2022 until 2030, we're still in a bear market because
Yeah, I
of
Yep.
think
oil?
this is going to
Like 8 more
like Kai
years.
said, the the best case scenario is or this will be worse than the great financial crisis because we just have to, we've kind of kicked the can down the road since 2008. We've been keeping interest rates low, and the Fed, if you look at the Fed's assets, the trillions of assets and the bond buying, the mortgage-backed security buying it's doing, and the interest rates, that the levels of interest rates, they're they don't have much leverage. They don't have much space to cut interest rates any further.
Yeah.
I mean, basically, the Fed is not going to be able to save the um, it's not going to be able to save the economy again, and just basically cut rates down to zero and try to get itself out of the mess. And I
It
think
feels
because
like
of
they're.
inflation, yeah. Go ahead.
It feels like they're just gonna like slowly inch it up, 25 basis points, 50, 75, and then they're probably gonna hit like around 100, and that's when they're gonna drive the car into the wall, or the Thelma and Louise, just and
Yeah.
then
I
So
think
and
the
then
only
that's when
thing
they.
the Fed is want to raise rates that much. The only thing that Fed can do this week is to say that they aren't to blame for this sky high inflation and they'll try to be less aggressive than they should
yeah,
because
he's
it's
trying
already
to
impacting
engineer
consumer spending.
what's called a soft landing, but I don't think you can do that if you're doing double barrel tightening.
Yeah.
It's
Yeah.
he's raising rates and cutting, the asset purchase program, which is going to
Mm-hmm.
remove a lot of liquidity from the system. And then, the banks don't want to buy what the Fed is buying. I mean, they created moral hazard. So I mean, a way to look at it for the average consumer is look at Uber, right? Uber has not been profitable for how long? And then when rates rise, their cost of debt's going to be much more expensive. So they can't fund their way to they can't fund all this negative EBITDA, negative profit and losses. they're only profitable in their ride sharing business now. But the reason why they're profitable because they raise prices significantly, and that's going to have an effect on demand, right? So Uber Eats, DoorDash, all these companies just losing money and they're not profitable. The rising rate environment's gonna force them to raise prices, and that's gonna cause more demand destruction. And that's gonna add to the recessionary issues because people are gonna order less, and they're gonna start going to the grocery store. They're gonna start not use Uber as much when things cost more money, right? That's why Netflix, for example, they raised
Mm.
prices, and look what happened. They lost subscribers. And we're going to see a lot of people raising prices like oil. You raise prices on oil, what happens? People will drive less. They're going to spend less. They're going to fly less. So we're seeing like this whole effect happening, and the Fed can't do much, right? The Fed can try to pivot, which will cause, I think, a very steep rally when they do pivot. But people are going to realize that the can's been kicked so far down the road that now the central bank has no impact. And if they try to print more money or try to increase their asset and inflate it further, they're going to make inflation go potentially hyperinflationary, which is not something they want to do, right? Because inflation is running at 8% in the US, 9% in the Eurozone. That's crazy. That's like crazy. That inflation cannot be sustainable. Like if we continue to have quarter over quarter inflation rates like that, then it's going to be a self-fulfilling cycle where people are going to basically expect higher inflation, and it's going to destroy their savings, and it's also going to hurt a lot of debt. It's going to have a very negative impact on growth when inflation is that high. So stagflation is already the base case. Like we already have that. It's clear that we have inflation and low growth, which is like stagflation. And then now the concern is the Fed going to try to save the economy again and let inflation run rampant, or are they going to fight inflation? And right now they're going to fight inflation. They have to. Like that's the only way out of this issue is to fight inflation, and that's what they've committed to. That's what Powell has said. So when I read the last FOMC meetings, you notice in my quick trades channel, I said this is hawkish. We rallied off that, and I shorted that rally immediately. I was like, what Powell said was very hawkish. It doesn't make any sense why the market is rallying. And what happened after that? We sold off like crazy, like 4% down, and then pre-market 2% negative, and on top of that negative, another 4% down. I mean,
Yeah,
that just
it's
tells
been
you
so
it's
consistently inconsistent, and by that I mean you'll just see like a complete contrarian move to what the fundamentals telling you is going on. They'll come out and be like, "Oh, we're gonna raise by like 100," just like the most hawkish thing ever, and then it'll just pump right after the news. Um, or if they come out and say, dovish, which they haven't really lately, it'll get nuked.
So you're all looking at another 30 to 50% downside in the next 6 months. I mean, with
I would
all
say
these,
a
I
year,
don't
give it
think the
time, but
market is pricing in stagflation. It has priced in recession, but stagflation, I don't think has been priced yet.
It feels like to me it feels like things are kind of normalizing. Like, and by that I mean kind of going back to before 2020 when they just when they injected, I don't know what the equivalent would be, like epinephrine or some kind of adrenaline into the market. And by that I mean just a bunch of liquidity pumping money in before the market. So now it's kind of like getting back to normal. Like valuations are going to even out. You're going to have a couple quarters of people reporting, and I think so. I don't know that we're going to have like these big drastic moves like we've been seeing over the past few months. I think we're going to sort of just see more like of a leveling going on. But
Or maybe
overall,
it's just
feel bearish.
consolidating. Well, there's a lot of, you mentioned about games being consumer discretionary. You'll see more of that maybe this week because NetEase Games is reporting this week. So a lot of Chinese companies are reporting. They would still be shorted. If you love to short this week, I think the ideas to short would be NetEase. NetEase is still trading near 96 to 100. That's like just off 20% from its highs. And
Mhm.
then you've seen how a lot of fast food companies are just getting to be killed recently, like a lot of consumer defensives. Obviously, Walmart, Target forced them to re-rate all of these discount stores. But think about the fact that McDonald's hasn't, I mean, what is it trading 35 times multiple? We've got like a lot of these consumer discretionary items. Like this week, you've got a lot of numbers coming out from Abercrombie and Fitch, Urban Outfitters, um, Macy's, Nordstrom. If the economy is really roiling towards the ground, then we know that
She
I
froze
think
up.
she disconnected there. Yeah.
The one thing I will,
um,
I don't know, I think there are some spots there looking at like Make My Trip, that looks pretty decent to me. You know, people are traveling. I know eventually the demand with is going to get hit, uh, but people are still getting out and booking and traveling. Um, if you're shorting Build a Bear, then there's probably a place in hell for you.
Build a Bear Workshop, BBWI. I haven't.
But other than that, I mean, I don't see any other bright spots here. To be honest with you, I really don't. Big lots should be interesting too. Costco is probably going to be a really, really big one.
I really like Costco. I think that because in terms of inflation, Costco is like the best and most trustworthy brand in America, and definitely I think in a lot of countries now. I mean, there's Costco's in Australia, there's a Costco in Shanghai now.
Hmm.
And you think about most of their profit margin and profit is actually from their membership. So if they increase the price of their membership and we sell off or whatever, I'm buying Costco hand over fist because they a lot of their food prices they have a very strict policy of only like taking I think a certain percentage. So whatever the cost is to them, they only will pass on like 10% or whatever to the consumer. I
Hmm.
forgot, but it's a very big part of the founding philosophy of Costco, and all of their pure profit revenue and margins is from the membership. They have their own chicken farms. They basically have a almost vertical supply chain, so they control a lot of their costs. If you think about like they also have limited exposure to China. So if anything happens between the U.S. and China, Costco is pretty much insulated except for like the electronics they get there. But they have a lot of their own brands, Kirkland. So if people stop buying the more expensive brands, they sell their own Kirkland brand, which I love all anything Costco
Yeah.
Kirkland brand related, right? So they
Hmm.
are very insulated. And plus, in a recession, I'm not going to sell my Costco membership. Like I'm going to shop at Costco even more, right? I'm not going to shop at Walmart. Again, Walmart's
They
more
got
expensive than Costco, right?
they
I'm
got,
going to buy bulk.
they
So
got last week in that Target sort of sell off from like
They
four
got
yeah,
ninety.
the
so
550 to 400. They already
which
got
which I think is
more
uh
than
is is is
30%
not
before
the
earnings.
smartest because BJ's look at BJ's earnings they did great. BJ's was growing and they reaffirmed their fiscal year 2022 guidance as well. And BJ's is a wholesaler focused mainly on grocery goods, right? So grocery is not going to go anywhere, and Costco is the king when it comes to that in terms of like cost to consumer. Not only do they have affluent customers shopping there, the main thing is who is going to sell their Costco membership. It's not going to be like a Netflix where they lost 2 million whatever subscribers. Costco's not going to bleed much members at all. If anything, people are going to shop there even more. So I'm very curious to see how earnings play out. So if it's a very positive earnings, I'm not going to play the earnings. I just don't gamble like that. But
Yeah.
if it's a positive earnings, then I'll
I
take a
guess
long
it's a
position on Costco.
neutral. I mean,
Yeah.
I understand, Jeff, because when there was a recession in 2008, practically everyone just kept their money in defensives. And when they meant defensives, they meant discount supermarkets. And I
Yep.
think because everyone knew that consumer staples generally are defensives, the people priced it ahead. Um, People just went 30 to 40 times multiple on Walmart and Costco.
Really?
They
Oh,
paid
I didn't know
huge
that.
discounts. Yeah. Costco traded as high as 35 times multiple. So I think
Wow.
like what the market did was they gamified everything. They've already seen what happened in 08, 09. They already knew what recessions did to stocks. So like 6 months ago or roughly, they've been like pushing everything. Like who pays 25 times multiple for Campbell soup?
I know that's
Really?
crazy to me.
So like
They're
Clorox,
not a growth
Clorox
stock.
like spending Kimberly Clark, I think on average, every consumer staple was getting bid up 100% higher than their historical values. So, what I think happened to the market is because everyone has historical cheat sheets. For instance, I'm not sure if this is right or wrong. We could see like in 1970s, gold shot up, like commodities went 800% in 1970s. Like the index went from 1 to 8. So everyone today is like thinking, okay, I want to save my money from inflation. I just park it in gold, park it in copper, silver, commodities. If not for like last month's margin liquidation, if that were still going up, it could be the bubble. Even if the fundamentals for that sector is really where inflationary hedges typically are. Because
Yeah,
you ask, because a lot of people are also asking, how come uranium would fall when China's investing in renewable energy,
hmm,
U.S. is also opening more nuclear plants. I
yeah,
mean, worldwide, everybody knows that they have to invest in energy.
yeah,
So I think like what happened last week is similar to what technicians would say as a capitulation. So I do think there will be a bounce because some of the drops have been not related fundamentally.
yeah,
We've seen commodities go down because China locked down, and people are saying there's a potential demand destruction. And yet, if you look at supply and the math, we have falling inventories in oil,
yeah,
even with the SPR reserves getting given. So the strategic petroleum reserves is like being released by the Biden administration. So you think about all the funda, it doesn't make sense that with screaming high inflation, commodities go down. It's weird. And that happened last month.
yeah,
CRP was down, DBA was down. A lot of copper, uranium, like falling 50% month on month.
yeah, yeah,
So and with good news. It's so weird. Like a lot of these fertilizer companies, like even farmers, like tractors, last Friday, John Deere had good earnings, and yet it fell 15%. Part of me thinks that the selling now is the lazy part as well. I mean, I
yeah.
understand people love to sell things like they saw Walmart go down, Target fall down. So it's possibly that they just shorted everything. Costco, Target, all the retailers, but they could have overshot.
One,
About a
one,
15% rise in Facebook or 20%, right?
one
Upon
thing one thing I'm keeping an eye on is definitely Tesla. Um, that's gotten pummeled here in like the past few weeks. Went from like 1,000 at the end of April, and now sitting at like 660. But I mean, you're looking at two more factories coming online in Berlin and Austin, like over the next year to 18 months. Um, and if you're getting Tesla, below $500, I think it's a tremendous buying opportunity. Even with rates, you just if you can get
even with
Tesla
rising.
under $500, then I think you deploy a little bit of cash into that. Um, you can go, yeah. I mean, I think there's room to go below 500. To be honest with you,
Yeah. Well, there's just I think two EVs that could win in the world, and that would be only Tesla and then possibly 1211 because everything is vertically integrated for them. They've
for
got the
1211,
commodity price, BYD of
yeah,
China, the
for
Tesla. So
BYD. Okay.
like they're the only ones with battery supply, commodities they've already bought. So even if commodity
They have
prices,
charging stations too.
yeah, they have the entire ecosystem together already
Oh
in
well.
place.
Okay.
So those two are the only ones that is worth surviving. And I remember seeing a tweet wherein they said that the stronger companies, if they fall 30 to 50%, ends up buying everything. During the crisis, if you really think the reason why the fangs are always being bought, for instance, Apple, why is it just dropping 30% from its peak? And why would Warren Buffett still deploy his money buying Apple against Michael Burry, who is shorting Apple supposedly? People are saying, what people forget is that in a crisis, only the people who have $100 billion of cash war chest can buy practically everything, their competition, the
Hmm.
virtual reality, all the glasses for like peanuts.
Yeah.
So like that's the reason why large companies would fall less. And Tesla, therefore, if it drops like 50 or 60%, no matter the valuation extremes, um, the argument is that number one, you will always have passive funds, and those are the bogleheads. Trillions of dollars will always buy the Qs. So that will always put a bid on Apple, Tesla, etc., no matter the economic condition. And the other thing, they do have zero debt. Like they are the best positioned in the
Yeah.
decade for that electric vehicle displacing ICE. And nobody knows really how this decade plays out. But everyone's saying, well, you've got a population that's gonna really replace that ICE, whether it takes 15 years to happen or 10 years. Millions of deliveries that Tesla did was just, you're still, when people say that it's still too early in Tesla, I believe in them. Because you just
Yeah.
had 1 million delivered cars, and you're talking about 1 billion ICE engines. Like that could be like the next 20 years of Tesla. It's interesting. This Democrat, this sexual harassment, I don't know, like usually it shouldn't affect stocks, but since we are in a recessionary world, bad news sells well. You can make fake news on Tesla and it will be
It's
believed
just
that
it's just we're seeing Elon Musk kind of unravel a little bit, right? I mean, some of his comments are really interesting, and of course,
emojis shit. That's
yeah,
how
and
his
he's
comments
tweeting
now
a
are.
lot more often, and I think he screwed himself on a Twitter deal. He's not supposed to disparage Twitter at all. And he also signed a deal, basically signing his rights to do any due diligence on the deal, which to me is kind of a red flag. Like, why would you sign a $48 billion takeover and giving up the right to investigate, Twitter more deeply? He signed due diligence away, so he's kind of stuck on the deal. Like, Twitter board is saying that they're committed to the deal. So to me, it's like it shows a lapse of judgment, and if you're seeing that, you're gonna go risk off, right? You don't want to risk, like, what if Musk does something else? Anything he says or does can significantly impact the share price of his companies. So as an investor, I would just kind of be hands off until things stabilize again or something else happens. The political hit pieces and stuff, yes, it's definitely interesting timing. Um, but there's still a risk that some or more of it could come out. Who knows? SpaceX did confirm that there was a settlement agreement. They confirmed it that there was actually a settlement agreement. So to me, that's just too much risk, and investors are just going to be like, okay, let's just wait this out and let it pass through. And I think that's going to give us a good entry on Tesla because they're growing 50%, right? And like GM and other companies are like negative 20% growth, and they have a shit ton of debt. I mean, Tesla, the debt of Tesla compared to all the companies is insane. It's insanely different, right? These legacy ICE companies have way too much debt. So I think this will be a really good buying opportunity for Tesla once it hits like the 500 range. And regarding Apple, Apple's margins are like 26% total margin, and I think that inflationary pressures could be seen as eating into Apple. So I think Apple could fall to like 100. I'm expecting Apple to drop to maybe 100, and then I think that it could be attractive for a bounce. But if iPhone demand craters, like in China, cell phone demand dropped, I think like 30% or something crazy. Apple could take a significant hit from that because look at China's like wealth, right, and stock market. It lost trillions of dollars, and it's at the lowest point it's been in a very long time. So a lot of people's wealth is kind of gone in China. So those people will probably not be buying the next iPhone, right? So it's very interesting to see if the last earnings that Apple had, which put them at almost
It's
100 billion in revenue in a quarter. That's just insane how much revenue growth Apple has seen. It could have been its peak, right? So that's why you saw after earnings it kind of rallied and just sold off, regardless of like the demand that Tim Cook was saying. He said like all of our issues are supply chain related. We're also seeing a lot of articles telling us to buy Apple. Apple looks good. Intent to buy iPhones is really good. When these articles come out, I really question it because what they're trying to do is they're trying to get people to buy Apple, and they'll give the bigger funds liquidity to then sell Apple. So I honestly think Apple, based on the flows, it's going to 100. There's way too many massive put flow on Apple that are
Yeah.
dated for June that basically tell me that the stock price is going to $100. Like it's crazy. Like I'm seeing like 30, 40, $50 million put flows that I've never seen on Apple like before, right? I've seen call flows on Apple, but now it's now put flows. So these are things to be cautious of. Long term, Apple is going to be great. I think Buffett is one of Buffett's biggest wins. They have the cash to acquire a lot of businesses. So I definitely agree with Nikki. Like long term, Apple, I'm gonna just buy up Apple. Long term because their silicone lead, their M1 chip, all these innovations. Apple Watch is continuing to take market share. I just got an Apple Watch for my birthday from my fiance, and I love it.
Yeah.
So I think the Apple will be a really good purchase.
What do you
about
the
the Apple Watch?
Mm-hmm.
Yeah, I think that what they do is I use it a lot for like tracking walking or when I play tennis, swimming as well, right? There's a lot of things that you can do that helps you be more health conscious.
Yeah.
There's also like really cool
Google
watch
Pixel Watch
faces.
looks good though. I recently saw Google
Yeah, you
Pixel
can
Watch.
put like your NFT on a watch, or like I do portrait of like my fiance and I, so it like
Mhm.
changes. It's like why would you buy any other watch? Like honestly, it
Yeah.
measures your heart rating. Your it's awesome. Like there's a lot more that the watch can do, and if you look at how computer technology is getting miniaturized, like we went from a mainframe. The first mainframe was like the size of like a room, like right, and then we went down to the PC, to the laptop, to the iPad, to the phone, then to the
Mhm.
watch, and then eventually glasses, right? So computer technology is going to continue
Yeah.
to scale smaller, and
I'm excited.
Apple has the
There.
best SoC technology, system on a chip technology.
I'm excited about the glasses. I want to try to demo those or it's supposed to be like a really big leap in augmented advance and just kind of incorporating that into like your everyday. I
Yeah.
remember Nikki doing a class on that like last year, and that was I was just blown away by that.
The thing about bull markets is that people really love to imagine things and see
Mhm.
things that are, well, the creatives always are being funded. The Renaissance, the paintings, all of the beautiful things in life usually happens during boom times in defense of the bubbles.
Yeah.
And the nice thing though that happened within the last 3 years during this liquidity pumped trillions of dollars is that I do believe that you gave a lot of money towards Tesla, and nowadays they're spending another. I think that the private equity market funded all of these climate change supposed names, and nowadays they're putting all their money towards energy.
Hmm.
You cannot. So I'm not thinking really bad, but so I know there are huge problems, but to assume that it's going to take you 10 years or 8 years, part of me thinks by 2023 or 2024 we're done with this recession, inflation, all the crisis, and then we're ready to actually go towards a new bull market. And what that bull market shape would be would probably involve renewable energy and oil working together. Like it's just going to be a decade still of Elon Musk still ruling the world. Literally this world and the next Mars, and like he's getting $125 billion for SpaceX. Probably that is inflated, but it also tells you that the world is so impressed with these engineers that they're being given all the money in the world to solve these problems, whether it be climate change, whatever. The nice thing is that the smart people today aren't thinking about advertising revenues. Think about it. Like they're not going towards Facebook. The best engineers now don't want you to buy things. They want you to solve the crisis, the energy crisis, the food crisis. So
Yeah.
so it's not as bad um as the last 20 years. The last 20 years, the fangs were making us connected. And then what? Disinformation, right? I mean, you just have lies all over social media. I think over time, this drop in social media, this advertising reliant thing that Elon Musk has openly spoken about as a negative for the world probably is a good I don't know. For me, I'm happy if Elon Musk gets Twitter, fixes Twitter, and then shows the path forward for what a social media company has to be. And maybe Facebook will take cue from what Twitter does. That open source algorithm, who knows? We might get a good world as long as Elon Musk is alive.
I
I'm,
think by 2030, because like we have quantum computing, blockchain will be much more developed from where it is right now. The only lot of blockchain technology is in crypto, but there's a lot of, it can disrupt logistics, supply chain, and all that. Gene editing is huge. It's not profitable yet, but eventually I think that will be huge, right? There's definitely a lot of positivity, going by after this decade. But I think that we have to go through this deflationary bust because we had
Yeah.
a boom
yeah.
of 40 years. You think about it, right? Big picture, we have to get a bust eventually, and a pretty big bust at that. Um, just looking at the Fed and how much money has been printed, we have to go through a bust. Like we have to correct. It's a cycle of fiat currency. We have to go through booms and busts. That's just how interest rates work, and so on, and the removal and quantitative easing to quantitative tightening. So we are in a quantitative tightening era. So that will last for probably 1 or 2 years. I don't know how long. And it's going to be a generational buying opportunity. That's the way I look at it. This is where most of your wealth will be made. Is you basically buy when everyone's panicking, and when news is bad. The other thing is we also have a debt crisis coming. If you look at countries like
Markets
uh,
opening, guys.
yeah, Sri Lanka, Latin America. There's a lot of countries that are going to go the way of Sri Lanka, and they're going to face a lot of economic instability. So we have to also be mindful of the debt and the unwinding of that debt, where a lot of the countries will start defaulting on debt. So that's another thing that I'm looking at closely,
Yeah.
because again, the whole debt bubble is popping, right? So that's going to have massive implications on countries and their political stability. If you look at the protests in Sri Lanka, that's a really good example of what could happen when economies are being destabilized and food inflation is causing people to starve. Like they can't even buy food. So it's pretty crazy what's happening, and we have to think about like this has not happened in the previous decades, and it's being more exacerbated by inflation and also by climate change. So it'll be interesting to see how the next 5 years play out. But I'm very optimistic about 2030. I can tell you that. So
Thanks, guys. Well, the market's open. Thank you for discussing all your thoughts about market. Yeah, it's good to always end the topic with a little bit of positives because like an entire hour of negatives, right?
Yeah.
yeah,
I'm bullish.
exactly.
I'm bullish on 2035. 2035.
That is such a bearish prediction. 2035, 15 years, 13 years after. Hey, I mean, I just wanted to share one article to like uplift the sentiment of the market when everyone's so bearish. I shared it on my Twitter. Like it's a how to hack the happiness treadmill. It says that in order to hack it, there's like 5 tools. He discusses about disruptors. What was that? Wait. Oh, this one. Hacking the happiness treadmill. The 5 tools of hedonic design. Experimental history. I'll read the parts that are really good. So once you're moderately happy, it's very hard to get any happier. And basically, he's talking about those marginal utility. and he teaches people how to hack happiness. So you have to have like breaks, disruptors, cutoffs, like just have a little of what you really like.
Yeah.
So if you like to drink whiskey, just have one glass a month so that, you long for that glass of whiskey or whatever it may be. Just read through the article. The 5 tools of hedonic design. How to feel happier or how to hack happiness.
I like that.
Yeah, look it up. Yeah, thank you.
It's a really good article. It's short, but lots of great examples. Um,
By
like
Adam? Is it by Adam
by
Mastroianni?
Adam, what was it? Adam, yeah, by Adam Mastroianni.
So the
So
open
example,
is
if you have plans to splurge, for instance, on a vacation, that's also a tool of hedonic design. Like you should end it with a very good note in the end because people always remember just the peaks and the finales. I mean, you think about
it's
it.
true.
People dissed Game of Thrones on the finale and they forgot all the great episodes in the middle parts. So that's like he's hacking how people think. Usually, when you want to have the best impact, usually at the end. So make sure that when you are having a vacation, just splurge in the end, or do something nice and put a memory onto it. This is why a lot of people would buy some sort of souvenirs or so that they can recreate that experience. Anyway, it's a good article. I couldn't give justice, so just read through it yourselves by Adam Masrioni, The 5 Tools of Hedonic Design. Okay, thank you very much. Market's open. I'll take a look at the
Thank
market.
you
See
guys.
you.
All right, take
Okay,
care.
All
thanks.
right.
Bye.
Bye.
Thank you. Bye bye.